What's up? I'm Dan Fredenberg, and this is another Chance Encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. Today, I'm joined with Sandeep. Is it Pradhan? Is that how you pronounce it?
Yes, yes,
Yes, phonics for the win. That's great stuff. I got some really exciting news for you, Sandeep. Today, we are joined by my very favorite member of the audience. And why is my favorite audience member here? It's because this is a chance encounter where I interview commercial real estate buyers, sellers, investors, syndicators, sponsors, you name it. And you may ask, why you do that? Well, the answer is if you know about private, off market, also sometimes called 506B syndications, then you should know that the SEC requires that you have a documented prior substantive relationship, or else they'll get ants in their pants. And when you get audited, you'll be in very big trouble. But before we get too far into real estate, Sandeep, do you want to say a thing or two about yourself before we start talking real
yes,
estate?
yes, absolutely, Dan. So I'm based out of here in Houston, in Texas here. I come from a oil and gas background. I've been doing in operations for last 18 or 19 years. And I've been investing in real estate for last 12 years. We were doing single family homes. And for last 4 years, we've been in multifamily and a little bit of a storage kind of gigs as well.
I love it. I love it. And the first segment that we do here on these chance encounters, it's the five distinct motivations. Before that, though, I got to say, but wait, check your eight. Sandeep, I don't know how you are with technology, but maybe if you can see through the camera and down, like down there somewhere, there might be this hideous subscribe button in the user's device, and they should probably, okay, it's a silly joke, but whatever. Anyway, the five distinct motivations. I've spoken to all sorts of different players in the commercial real estate field, and everybody has their own unique why, but at the same time, I found that they fit very neatly into these five different categories that I've put out here. And the reason why it's important to know the motivation of somebody in this industry is because these deals take months to close, they take years to go full cycle. So you got to know what's going to keep somebody from throwing in the towel. So that's why I go through these in every episode. The first one is preservation of purchasing power. What's that? Well, some people don't have a W-2, they don't have a full-time job, and the way that they make ends meet is from the proceeds of their portfolio. Basically, they get that money from owning the different properties. And if you're in that situation, you might think it's like, well, why are you going to make any more acquisitions? Well, there are a couple of situations. One is if inflation is rearing its ugly head, then you're going to have to make a new purchase because it's going to eat away from the purchasing power of your cash flow. But the other times are when you can buy at a steep discount, like when it's a distressed property or there's an asset crash. This is not where I'm at right now. Where I am is trading time directly for wealth. And what that's all about, I've got a background in tech, and tech people tend to be high wage, high salary earners. And when I started with my CRM agency, I started a CRM agency in 2011. And then I started doing the CRMs, the mass emailing, the mass marketing, the web funnels, and all that sort of stuff for a real estate company in 2014. And he was flipping 10 houses a month. He was doing 10 transactions a month and making money hand over fists. So it hit me, wait a second, why am I paying all this money in tax when I can work where my effort is rewarded in the form of deployed capital, aka equity, and that's what I'm up to. Now, that's a little too abstract for some people, especially youngsters, and frequently what they're more interested in is either fast tracking retirement, or in some way it really boils down to taking control of their schedule. And that might mean they're working fewer months per year or fewer weeks per month, or it might mean they're hustling like crazy 7 days a week for years and years so that they can retire early. But that is what they're in it for. And many people think that that's the only hidden motivation. Other people are trying to hide it. But I assure you, there are many that is not their motivation at all. Some people, they are fueled by ambition and generational wealth. They want to buy their entire hometown. They want to make sure that their great grandchildren never have to hold a day job. And that is why they're going to be hustling into their 90s, which makes them great partners on the GP team, because you know that they're not going to throw in the towel. Just like the last group, though, but they're not so much about their own family or their own name and legacy. They've picked a sector of society, or maybe it's animals, maybe it's the environment, maybe they want to send people to space. But whatever it is, there's a financial component to making a big impact, and that is why some people are making these acquisitions. So, Sandeep, of these 5 different motivations, what combination of those you think describes you best?
I would say the passing my wealth to my family, that has been, I mean, going back from an Asian background, that's, I want to give enough to my daughters and her kids and everything. And the second one I would say is offsetting the taxes has been one of the burden. It's a big burden for us, people who work. So using real estate as a vehicle for offsetting the taxes.
I love that answer. I love that
Yeah,
answer.
yeah. It's in the end, it's not what you earn, it's what you keep. That's important, and that helps.
Absolutely. And the funny thing about that I found in my personal experience is that, first you learn how to earn it. And
Yes.
then after you learned how to earn it, then you learn how to keep it.
Keep it,
And
yeah.
then you find out that you should have learned how to keep it before you learned how to earn it.
Earn it, yes,
Right?
yes,
Right?
absolutely right.
It's
Yes,
terrible. But of
yes,
course, it's easy to be optimistic, even though there are plenty of risks involved. Real estate is a business. All businesses have risks. And if you've ever been involved in a 506B syndication, these off market deals, whoever the securities attorney in the mix was, they should have insisted that everybody fills out this really invasive questionnaire. And if there was no SEC attorney, no securities attorney, run. It's really, really bad. You got to make sure that it's registered. The SEC would not be very happy to find out that you're raising capital or syndicating deals without registration. But I want to tell you, when I was going through that questionnaire, there was one question in particular that I thought it didn't give me very actionable information, and it was the tolerance for risk assessment question. So I made my own one, and it's a fill in the blanks. There are many popular investment asset classes, but I think blank is too risky. So Sandeep, it can be inside real estate, it can be outside real estate. What's too risky for you?
um, I would say the private equity. Investing in private equity where you go and invest with small or VC kind of companies, right? Startup companies. There's a component of both appreciation, and then there's a huge risk as well.
Mm-hmm, mm-hmm.
So based
Yep.
on our experience, it has been on that particular asset class.
I love that answer. I love that answer, and it actually brings me to the next part. And this one takes a little bit of explanation. So one of the things you're going to find out about commercial real estate is that it's a multifaceted industry. So in any company, you're going to have different people wearing different hats. Some of them are going to be more the public relations side. So they're going to be facing people and talking to them all the time, and they are probably not going to be what are called the spreadsheet junkies, the people who underwrite, spend a bunch of time digging into the
Investment,
numbers and
yeah.
finding them out. Now, that means that some people are going to be better with the numbers than others. And one thing I want to do for you is I want to make sure that you know which of the main metrics in a deal really stand out for my guest. And of course, if you are an underwriter, if you are that spreadsheet jockey, you're going to have a reaction of like, of course, all of these are important. How can you say that some of them aren't? But as far as knowing what the headlines are, that's what I'm trying to do here. And for anybody in the audience who is only listening and not watching, I'm going to read this list out loud for you. So the first one is cash on cash, then IRR, then cost per door. That's especially in multifamily. Next one is the net operating income, the NOI. Going in cap rate, and of course, when you're talking about the going in cap rate, you're talking about is it normal for where that property is located, because it's different all over America. The next one is the loan interest rate, then the occupancy, which is also known as vacancy rate, they're inverse, then the average income where the property is located, the amortization period of the loan, the difference between the market versus the in-place rents, so you have room to raise rents, the population growth where the property is located, so you've got some natural appreciation just because of increasing demand, the sponsor record, which means how many deals have gone full cycle and how many are active right now. The next one is the waterfall, split, and exit. So what happens after your capital is returned. And the last one I have on here is DSCR, which is for debt service coverage ratio, which means how much of the income is going to the loan as a percent. So Sandeep, I know that there are some other numbers that some people prefer, but you want to give your top three or something like that?
Yeah, I mean, I'm an operator here. I own 3 apartment complexes here in Houston. So for me, the number one is your market and in-place rents, and that drives the occupancies, you know. So we always want to make sure our occupancies are upstream and they are all tightened up. That is a major metrics for us to keep our occupancy high. Then the second one I would say is your DSCR, you know, that is linked with your NOI. So we take the loan from the bank, so we want to make sure our DSCR metrics are tightened up. 1.25, 1.3. We always try to put it at 1.4, so we keep a buffer what we get from the lender. And the third one I would say is just a cash on cash, you know, the cash flow that we get after the NOI, debt, and the, you know, the spends. Mm-hmm. So those are the 3 major ones for me.
I love it. I love it. I'm eating it up like a subscribe sandwich. It's very subtle. I can see. Anyway, it's my reminder to pull out the Dan Does Deals Commercial Core Competency Cube with the 6 different roles, the key roles in a commercial real estate deal. And if you're looking at this and going, wow, I wish I had one of those, well, the good news is it's free. You can go to dandoesdeals.com. There's a great big button with this a picture of this die on there. And I did one thing that is kind of a dummy move, which is I don't even ask for your contact information in return for this freebie. That's the cardinal sin of marketing. You always ask for some sort of contact information instead. But I don't want anything in your way from printing this out and practicing these different roles. You'll see in a moment that it really helps you effectively communicate with people in this industry. And honestly, if you intend on having a future in commercial real estate, your ability to effectively communicate is going to make or break your chances. And that's why in every episode, I go through all 6 sides, and then you'll find out exactly how my guest fits into these deals. And we'll start by talking about repositioners, because they're the more front-facing people. You'll see more repositioners than anybody else in this industry because they're acquisitions people. So they're doing a bunch of paperwork, looking at a bunch of different properties. And what are they doing with that paperwork, you may ask? Well, there's a fancy word for it. They're underwriting the deal. That means they're doing the math. They're figuring out, first of all, is this seller/broker even telling the truth about how much this property is making? And also, on top of that, the repositioner's job is to find more upside, to make the property more profitable. How can they change it to make that happen? And sometimes they can make it more profitable even without making real changes to the property. And the way they do that is repositioners all have a vast network of financiers. That's people who only deal with paper and money and whoever owns the building. So they're not dealing with tenants. They're not dealing with anybody like that. And the reason why the repositioner has to have this vast network of financiers is because if they can secure a more advantageous loan, that goes straight to the profitability of the building. So that's why they have to know lots of financiers. But the next place the repositioner is going to look is to operations. Make the operations more efficient, stop those Benjamins from going down the toilet. But I'm sure Sandeep can tell us that there's more to operations than just unclogging toilets and collecting rent and mowing lawns and possibly shoveling snow, but not in Houston. It's more where I am. But me personally, I don't know if you know this about me, but I'm from the internet. So that means when it comes to operations, the part that I have to contribute for a GP seat is the marketing and the tech and the automation. And that might seem strange, especially because I focus on deals that are 100 units or more. And the reason for that is because that way you're going to have some sort of third-party property management more often than not. And if they are dropping the ball as far as vacancy goes, you need somebody on the GP team with some serious marketing chops, and that's where I come in to get those units filled. So operations, that's one of the key parts of making this stuff work. But of course, that's not the only place that you can find that upside. And so frequently the repositioner has to get a contractor team involved to do a value add to build up the units, make the property nicer. And the idea being the next resident will be more than happy to pay more in rent than the previous one because it's a nicer place. But of course, there's a hard limit to how much value you can add to a given property. You could go ahead and gold plate the toilets, but it's not going to give you a return on the investment. So the thing you need if you're going to have a contractor team and you're from the internet like me, you need locals. You need boots on the ground, somebody who can be there in an hour or two, because you bet that will not be me. I'd still be stuck at an airport in an hour or two. So you definitely have to have those locals involved because they're going to keep an eye on the contractors, make sure they're not using subpar materials, make sure they're not dragging their feet, and then also making sure that the operations, they're actually telling the truth with their asset management and whatnot. But when the repositioner, let's say you're the soon-to-be repositioner and you are looking at a property, let's say you're an engineer or a physician or an attorney, something like that, and you get the idea of, well, I can put down a down payment and buy a house. What if my friends and I all pull together, $100K or something like that each, and then we buy that 350 unit apartment complex that's down the road? Well, the problem that you're going to run into is as a repositioner, you're going to turn around to the financiers and say, check out this property. It's 350 units. It's tens of millions of dollars. Do you have, I don't know, tens of millions of dollars you want to say, lend us? Well, there's one big problem with that little hypothetical. And if you're involved in a guru or mentorship program, you're going to want to listen carefully to this part. The financiers are going to ask, who's the sponsor? Who's the KP? What's that all about? If you want to be eligible for a commercial loan, somebody in the fold, in other words, one of the partners, the GPs, will have to already own a similar asset. So if nobody has a 350 unit apartment complex, the bank's not going to believe that you're not going to run it into the ground. So they have to have somebody like that. And then there's also some net worth requirements among the GP team. You need to have a net worth of at least the amount of the loan, and you have to have a certain amount of liquidity. But if you have all those pieces, you got yourself a commercial real estate deal. So Sandeep, you already mentioned operations. Pretty much everybody has some repositioner job because you have to pick which deal is good and which one's not. You're definitely going to be boots on the ground in Houston, as you already mentioned. And of course, there's going to be some financier relations. But I don't want to put words in your mouth. Where do you expect to fit in?
I'm also a KP, in fact, because I'm also a KP and a GP. I've partnered with many people out of state, out of Houston as a KP. So I would be open for that.
Excellent, excellent. So then let's talk about the buy box. When people are asking, hey, what you're looking for, and they're in commercial real estate, we're really asking about three things. First one's geography. Where is it? Which state? Which county? Possibly even which neighborhood. Before you call it ideal, it's got to suit those criteria. So that's the geography. Second one, size. Most of my guests on this show are in multifamily, and the way that you define the size in apartment complexes is how many apartment units are there. So they call that unit count. So the reason why it's important to know the size is because the type of group that's willing to take over 10 or 15 unit apartment complexes, they're going to look fundamentally different from the type that are doing 100, 150, 200, 300, and so on. So that size is going to matter. But the third one, I call it desirability. The more common term for it is class. And I call it desirability because it's really split into two different parts. The first one's the condition, and then the other one's the area. And when you're talking about the condition, that's how old is the property, the building that's on it, how beat up is the property, and then of course, when it comes to luxuries and amenities, how desirable is it? How nice is the place? That's the condition. But when you're talking about the area, especially because we're talking about multifamily, the school districts where the property is located is absolutely going to matter. And any kind of real estate, you're definitely going to have a crime rate that's going to matter. And then the last one, I like to borrow from the old real estate saying, location, 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 even though I don't really like it, because what I really think they mean is traffic, traffic, traffic. If a gazillion people pass by a given location every single day, then it's going to be more desirable than someplace that is not very densely populated. But both the area and the condition are ranked the same way as in grade school, where you got A plus at the top, and then A minus, and B plus, and so on. So Sandeep, as far as your buy box goes, what's your sweet spot?
My buy box is Class B, more than 1980 vintage, so I don't have to deal with boiler and chillers. Between 60 to 150 units, 80 to 150 units, less than 15 million in terms of the price. So, and maybe a Class B. I have done some Class C as well, but I like both Class B, B minus, and B plus.
And it's all in Houston, right?
Yes, yeah, they're all in Houston. Yeah.
Okay, and are there any neighborhoods or counties or something specifically that you want to mention, or?
No, I'm open. Yeah, on the MSA of Houston. But I'm also very aggressive on what we call as a Texas Triangle that encompasses your Houston, Dallas, Austin, San Antonio. So anything between fits in that Texas Triangle. Yeah.
All right, great. So then let's talk about people. And my favorite thing about commercial real estate has to be, since it's multifaceted, you got these different jobs. The fact is, everybody is so eager to give referrals, build new teams, and it's amazing to see a community that's that helpful. But even though that's the case, because everybody has their own unique skill sets, they're going to be better off helping some people more than others. These days, I'm always eager to meet more sponsors and KPs, just simply because my digital background means that these are the people who have the systems in place, the fundamentals in place, where a person like me can make a disproportionately big difference. When you're first starting out as a repositioner, you need grunts who can put in 80 to 120 hours a week, and that's not where I'm at my most effective. The other one, of course, is talking to financiers, different people who are interested in funding deals. So Sandeep, as far as you're concerned, though, who's in the audience that you would like to meet? And keep in mind, if you have any 506B deals, don't mention them specifically.
Meet in the sense, I didn't get your question.
Oh, okay, so my question is, who in commercial real estate are you most eager to meet? Is it more financiers? Is it contractors, operators, local boots on the ground, repositioners, other KPs?
I would be mostly interested to meet with more financiers, for the lenders who can offer creative financing options. So specifically people who do hard loans and, fixed loan, agency loans. So I'm always trying to look for them. Yeah.
All right. Awesome. And so then people must be wondering, they're probably saying, hey, that's me. And how do I reach out? Well, first, I'm going to tell you how to reach me. I've got this really distinct last name, so I'm super easy to find, especially on LinkedIn, which is the social media platform where I spend most of my time. But if you have your phone handy, and you can pause the video, you can scan this QR code right here, and that brings you to the FAQs page of the 506 platform, which is where I offer the service of maintaining and building the IT so you have that documentation of your substantive relationships with your different investors. And the idea being that if your computer, your laptop falls in the bathtub, there's a good chance that all of your documentation will be destroyed. And that's not a good enough excuse to the SEC. So that's something that I have on offer. And of course, I have some books like the Real Estate is a Scam book there, which is about some of the nasty things you hear or find out in the coaching industry of real estate. But Sandeep, if people want to meet you, we met through LinkedIn. Is
Yeah,
LinkedIn the best way? Or is there a website or phone, email? How should
yeah.
people?
The LinkedIn is the best way to meet, or Sandeep Pradhan on LinkedIn, and then the other best way for me is to just call me at my phone number. It's 818-748-7658.
All right, beautiful. And that brings me to the last thing, which is actually not for you, Sandeep. It's for you in the audience. It's my public service announcement. If you've been watching this episode and you've been experiencing searing pains in your eyeballs and like migraine-like symptoms, I think it's because of the hideous subscribe button that's just down there, and you can hit it and get rid of it for free. It doesn't cost you anything. And full disclosure, the reason why I want people to hit it is because if enough people do, then YouTube will actually start to pay for these videos instead of me. I think that would be amazing. And the trade-off to you, just so we're clear, is my videos may show up on your list of suggestions, but quite frankly, you can go ahead and ignore those suggestions because I just appreciate the fact that you spent this time with me. Just like Sandeep, I appreciate you joining me. This has been great.
Thank you, Dan.
Awesome. Hey there. Are you interested in commercial real estate deals? Would you like to build your network of investors and deal sponsors? Well, the best thing I can do for you is have you appear on a chance encounter interview as featured on dandoesdeals.com. You may know me from 506 or as a top commercial real estate voice on LinkedIn. And if I had to think of the top factors in your success in commercial real estate, my top two would be your network and your ability to effectively explain how deals work with effective communication. The 15-minute chance encounter format, it checks both of those boxes, and they ensure that you can share your private deals with me without the SEC calling it a public solicitation. So hop onto LinkedIn. You can see my name is over here, Dan Friedenberg, and search for my name. And the best way to reach me and book that is to message me through LinkedIn. And don't worry, it doesn't matter if you decided to enter this space just last week or 2 weeks ago, or if it was decades ago. It'll be fun and easy to look good. We're just asking multiple choice questions based on your core competencies you look to contribute, your level of sophistication, and all that kind of stuff. So I hope to hear from you soon. Thanks a lot. Bye. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.